Okay, it's ticked over 5:15 on Thursday, just before Easter, and welcome to Pursuit Advisors Q&A on the JobKeeper payments. First of all, I'm just going to acknowledge that we've had a pretty busy week, so if we do have any tech difficulties, I apologise in advance for those. The lovely Steph from our office is at home with her beautiful family, and she's normally the one behind the scenes controlling this to make sure it runs seamlessly. So it's just JP and myself, so John, Paul and myself tonight. So just putting that out there, if we have any tech glitches, I apologise in advance. Thank you, John Paul, for taking the time at this time of night after another busy week to answer some questions from our clients. And thank you to those clients that have sent through questions leading up to tonight over the past few days, as well as those that are going to post some questions tonight that have signed on. So happy for you guys to post questions as we go through our Q&A, and we'll do our best to answer them based on our knowledge of what has been announced in relation to the JobKeeper. I'm just mindful that I'm just going to let you guys know that this presentation incorporates what we know as up to effectively sort of what was announced last night and then's been released today. Some of the information is still limited, and this is general advice, so we do encourage that you seek your own independent advice if required in relation to what we talk about. So now I'm going to hand over to John Paul to bring us all up to speed with what occurred yesterday and last night, and then since what's happened today in relation to the JobKeeper. So over to you, JP.
Yeah, thanks, Paul. There has been a little bit happening in this space. Now, what has happened in terms of the legislation of the bill is that currently the payment details are still not available. So what has happened though is that last night the coronavirus economic response package bill was introduced and passed in Parliament. However, unfortunately, it didn't contain the finer details of how the JobKeeper payment scheme will operate. What it did was set up the legal framework, however, to give the Treasurer the power to make rules as to how the scheme will work. Unfortunately for us, these rules aren't available. Now, in terms of what the ATO are going to be doing in relation to this, the Commissioner of Tax will be given certain discretions relating to the operation of the scheme, including, really interestingly, Paul, the ability to provide alternative turnover tests that can be satisfied if the tests already announced by Treasury cannot be met. So, for example, if you're a business with a turnover below $1 billion and you must have or will have at least a 30% reduction in turnover. But it's anticipated that the ATO will publish something on this once Treasury has released their rules. Again, our professional bodies have told us that the information is imminent, and as soon as we receive it, we'll then pass it on to all our clients. In terms of, do we expect any major changes out of what we've previously been told? Again, it appears that the information we've all been provided is going to be, 99% representative of how the scheme ends up operating. Interestingly enough, a couple of the fact sheets they've put up still remain. So based on that, I think, and again, the Institute of Chartered Accountants also believe that that's the way it's probably going to be in terms of substance.
So what I'm hearing, JP, is that they've pretty much made their decisions as though they haven't yet told us practically how it will work in relation to, one, to registration of it, and two, to when the payments will come through for eligibility and perspective, but that is going to be announced any day now.
100%, yeah. So the broad framework appears to be set, but in terms of how it's run from a practical point of view, it's going to be a definite watch this space. Okay.
I'm confident though, based on what we've done and the reading we've done even since Monday last week, and again during this week, and the Q&A we did on Monday, and then what's since been passed, is to get stuck into some of the questions that we've had. So we've had lots of questions, and we've tried to focus on those that have been most common and that we think are most relevant to the overall business environment out there, so you employers and their employees. So we'll focus on those questions. If we do happen to miss your question though, happy for you to send an email through to our inquiries email address or to your specific advisor, and we'll come back to you as soon as we can. We are mindful, though, it is running into Easter and bits and pieces, and we don't want to be on this for an hour or two. So I'm going to kick off, JP, with you to answer the first question in relation.
And just firstly to everyone, if you've got anything that comes to mind, please use that Q&A function at the bottom of your screen. We welcome any and all questions on this. So please, if anything pops up, just please put it in the Q&A and we'll be more than happy to answer it. So the first question that we've got came from our friend Karen. And Karen asked us, she said, we've got an employee who's learnt less than $1,500 a fortnight in the current pay run. Do we just pay them what they've worked at the moment? The pay cycle finished last Friday, April the 3rd. The concern that we have is that if we top up with the JobKeeper payment, we may not receive this back. Thanks for that question, Karen. Great question. So our advice to all of our clients in this instance, so practically if the employee has only earned $1,000 in the last fortnight, our advice to you is to only pay them that $1,000 which they earned in the last fortnight. The reason we say this is that because we still haven't received the full practical elements of JobKeeper, and also your registration hasn't been accepted, we're saying just pay what the employee has earned. Once we become entitled to it and then receive it, we can go back and back pay the employee.
That makes sense. John Paul, I'm comfortable with that, and I think that's fair and reasonable. You don't want to pay money out to an employee that you may not be able to recoup if for some reason you find out you are not eligible for the program.
100%.
Another question in line to paying employees and how you actually process that. So question, after reading up on the JobKeeper program, at this stage we've decided we'd want to go down the path and register for that. Should I be paying all employees the $1,500 before tax per fortnight? And is there a way this should be set up in Xero? I read that employers who are entering the program are to start paying the $1,500 to their staff now and backdated to the 30th of March, and the ATO will reimburse in May. From Kate. So I'll break that down into two parts. So yes, if you decide that you want to register for it and come through it and you are eligible and gone through the process once it's live, yes, you are to be paying all employees a minimum of $1,500 per fortnight before tax. Those earning more than $1,500 per fortnight are entitled to be paid over and above that. There is some things potentially coming through in the Fair Work Act that may make that slightly different, but at this stage, I would act on based on their current pays as such, and you do need to pay them their full wage. The $1,500 is used just to cover that. So there's been a bit going around that say someone that only worked 3 hours a week, been a casual though for more than 12 months, are they entitled to that $750 per week? Yes. So some might say that's unfair, and it probably is, but the purpose is to get money into our economy. So that person would receive effectively $750 for a 3-hour shift if they're eligible for it as an employee. So the business must pass that all on. They cannot keep that. In respect to paying the employees, yes, you need to start paying them as soon as you have registered, Kate, for the program and been proven to be eligible. And the tax office will reimburse you in May. I know that may pose difficulties for some businesses from a cash flow perspective to do that. The ATO, though, has been very clear in their papers that it is the employer's responsibility to create the funding to do that, and recommending to contact your financial institution. So chat to the banks about their policies that they've put in place to allow you to access some funding to get through that lag. Even showing them your eligibility as well will probably see the banks advance you the funds required to make those payments. So I hope that covers that question, those two questions there for you, Kate.
No, great. Next question that I had came from Danny, and Danny's asked a really interesting one, which was, should you apply for the JobKeeper even though you think you may not get it? Now, our advice on this case, Danny, would be, we believe definitely you should be registering your interest on the ATO website. At this time, it's simply a registration of interest and to be on the mailing list to receive any and all correspondence as and when it comes out in relation to this. And we then think that you should do that. And then by the time detailed guidance and instruction is available, you'll have a better idea of whether you're eligible. And also another interesting thing is our understanding of the current literature is that if you think you're ineligible now, but you may become eligible later, you can always register at that point. It's not a case of if you're not registered now, you miss out. However, again, we just want everyone to be registered, so that way you receive any and all updates as and when they come out. Probably the other thing that I'd say to you, Danny, as well in this case is the first JobKeeper payment's not available until the first week of May, paid arrears for effectively the month of April. Now, a lot can happen in the next 3-4 weeks, as we all understand. So I wouldn't be, not registering my interest simply because you think you may not be eligible.
Thanks, JP. A question here from Luke, and it's a little bit ties into what we answered from Kate earlier as well, is how do I process the top-up payment through payroll? So yes, and I apologise, Kate, you did ask a question around how that works in Xero. There will be some specific pay items that you will be required to set up in your payroll system to ensure that these process correctly. So you want to make sure that leave is accruing at the right rate, so you're not over accruing or under accruing annual leave and other leave entitlements for your team. Also, superannuation isn't payable on the top-up payment, so you need to make sure that superannuation is not ticked in the payroll item to top these up. We're hoping that the likes of Xero and Reckon and the like put some time into their software, but understand that it's a very quick turnaround to do this, to make this a fairly seamless process. We, though, understand that we aren't, like you guys aren't payroll experts in a lot of instances. So we're happy to work with you and provide some guidance around that, review what you've set up to ensure that you're paying the correct amounts. Because if you get it incorrect, it could cost your business a significant amount of money, one way or the other, either overpaying people's entitlements or underpaying and then being forced to repay at a later date. So yes, Luke, long answer to a very brief question. You do need to process them through your payroll system and ensure they are set up correctly.
Paul, we've actually had a question come in from Megan, which I think is quite a good one we should address now. Don't
sound so surprised, JP.
No, well, I'm happy with that. Megan's asked us a question, which is, should we start making the $1,500 payments to employees when you've registered for JobKeeper and you know you're eligible, even though you don't know if you'll be approved? Again, look, I'd say, this would be line up fairly close to the first question we had from Karen, which is our advice is until the registration is approved, not to pay the JobKeeper payments. Because we can always, because the ATO are paying us a month in arrears, we suggest not to make that first payment until you're sure that you're eligible and will receive it.
I agree with that advice. You don't want to part with money in these times until you definitely know that it's coming through to you. So good advice there, JP. Another question that's come in from Dan here, and it's a lengthy one, but I'll read through it because it covers a few different things. So Dan came across deciding to stand down everyone in his business when the announcements came through. It was a choice though, not a forced stand down. So the question is, when I notified our team about the closure of our business, I told them we were standing everyone down. I assumed this meant terminating their employment, but have since realised the stand down technically means they are still employed, just not receiving any hours or wages. Is this correct? That is correct, Dan. They have just been stand down. Unless you had valid reasons to terminate their employment, they would be still treated as employees of your business. You suggested you meant termination, and that's how it was interpreted. Happy to probably chat offline about what you need to do to get that back on the right track, which there's no dramas there, but there's probably a little bit we need to do in respect to that. As a result of the intention, you set up to pay everyone on the 29th to be final pays, including leave entitlements. where applicable, except for a couple of people you kept on the payroll that you were anticipating would be eligible for the JobKeeper program. How does that final pay situation play out in the event that we put people back on? Is it just a case of rehiring under a new contract, or are they as they were terminated, or do we need to undo something in zero? So I'm not going to get into the HR part of terminating and rehiring, but I will focus on their eligibility for the JobKeeper program. Based on what we've been told, it's been very clear that employees that have been stood down or terminated and rehired now will be eligible for the JobKeeper program as long as they met the conditions around being an employee for at least 12 months if they're a casual, as up to the 1st of March, or a full-time or part-time employee at the time they were stood down or terminated. So in respect to that, Dan, they will be able to be put back on the payroll and will be eligible for the JobKeeper payments based on what we've been told. What we need to do though in zero is we need to consider what you do with any entitlements that have been paid out, and that'll be a case-by-case scenario with which employee. And yeah, that's not another 5-minute chat. That's a lengthy chat about getting some advice. If you use someone like a specialist HR consultant, such as say Abby Goff or someone like that, we can get her involved to assist with that question. So thank you for that one, Dan.
Great. I've also had another question coming from Matt, and Matt said, JP, my business has only just started. How do I self-assess that my turnover's fallen by 30%? Good question, Matt. So the answer to that question is as we know, there is a 30% turnover drop with the comparative period from last year, is the guidance we've received. However, if a business hasn't been in operation a year earlier, and their current turnover is not representative of what their usual turnover would be, the Commissioner has discretion to consider additional information available so that they can prove that they're adversely affected by the impacts of coronavirus. So, for example, you might have a new hairdressing salon that is, unable to be open or only able to service one customer. Whereas if you're able to show you have the capacity to service 4 customers at a time, you're able to show there to the Commissioner that your turnover is down or would have been down 30% more than we otherwise would have expected.
Can I extend on that discussion, JP, in relation to the turnover test?
Go for it.
So I've had a couple of emails and conversations around this the last couple of days for those businesses that are demonstrating that they would drop by 30% on what their current expectations were. But as you said, they're either new businesses or they're acquired something, or the previous 12 months just isn't accurate.
Yep.
It's been very clear that the Commissioner is going to be given discretion to deal with this on a case-by-case scenario.
Absolutely.
What we're waiting though to see, and our Treasurer actually spoke about it today on radio, and he's trying to clarify exactly what rules they will provide to the Commissioner to use to deal with those sorts of things like lumpy income, new businesses, acquisitions and bits and pieces. The process will still be the same though for those businesses that don't meet that 30% turnover test, which is going to be automatically calculated based on BAS periods that you lodge for. So whether you're a monthly or quarterly BAS lodger, and it's based on the period April through to the end of September on being down on 30%. What they're saying though is that the process will be the same as going to the Commissioner for any sort of ruling that you ask for, a private ruling to give their discretion around the rules. So what our advice to clients is to have as much information together as possible ready now to show that your turnover has been impacted by more than 30%. So as soon as this does get finalised, you can lodge this paperwork with them. So there is a process that you need to follow, and you need to address it step by step. Once that is known, we will share that with those clients that have asked that question and anyone else that does require that. But I would start collating that work now, information now, so you're ready to go as soon as this goes live, so you can get to the top of the tree as such, because there are going to be a lot of people requesting for a discretion to be made. So my advice there is get ready and make sure that you have the information and the records to prove that. So till rolls, forecasts, bits and pieces, everything around what you've done in your business and why you think you're eligible for it.
No, that's good, Paul.
Now, I've got a question here from Kate, and she's asking this in the capacity as the spouse for a partner that's been stood down from work. The question is, my partner was stood down from work and would have normally worked public holidays, and was initially told he would be paid for these, but has since been told that they will now be deducted from his first JobKeeper payment. In addition to that, he's been told that he will not be paid his $1,500 per fortnight until May. Is this legal? So good question there, Kate. I'll be honest that I don't know the answer, and it'll be specific to the award, I would imagine, and some HR advice around the public holidays and even what's in your partner's contract on what would be required to be paid. So you would need to seek some specialist HR advice on that one. In respect to the second part of your question, though, on the $1,500 not being paid until May, if your partner's business registers for that program as soon as it goes live, they are required to, as we answered earlier, to start making those payments now, not wait until May, unless the employee agrees to that. So second part of your question, no, based on what we've been told, that would not be legal to wait until May, that your partner would be entitled to start being paid those funds now, unless he agreed to wait until a later date.
Okay.
So thanks for that question, Kate. And you do need to understand that, Kate. We touched on it earlier, that some businesses will struggle to have the capacity to pay the funds out before they receive them. So we do need to encourage those business owners that are in that position to talk to their banks, but also chat to their employees around what can happen there. But legally, you are required to make the payments as soon as you register.
Yeah. No, great. I've received another question here from Callie, which is, her question is that my daughter's a casual employee, has 2 casual jobs. Does she get 2 payments or 1? And the answer to that is no, unfortunately not. Sadly, you'll only get 1 payment. So each employee, I should say, is only eligible to receive 1 payment from one employer, being their main employer. Your employer who was registered for this scheme may actually ask you whether they are your primary employer or not. And if you are employed by one employer, we encourage you to contact your employer and tell them either to claim it or not to claim it, because the last thing you want to do is receive 2 lots of payment that you may then have to then get paid back. Mm-hmm. However, what is a good thing is if you're getting JobKeeper from one of your employers, the other one, if they're still open and able to employ you, you'll still be able to receive your normal payments from them plus JobKeeper from your other employer. So you may actually end up being better off overall under that case.
That's something to watch out there for, JP, and it's a good question, Callie, is that business owners need to be mindful of not just applying for this for every single person that meets the broad brush eligibility of either full-time, part-time or casual for more than 12 months. Mm-hmm. You need to communicate with each of your employees, and you don't want to get caught out getting funds that you shouldn't and having to repay them at a later date. But we're talking about $19,500 per eligible employee. So it's a significant amount of money that you do not want to end up having to pay back to our government. And no doubt they will be checking to see if people are exploiting this, and in no way should that be happening. So it's important for business owners to understand that, because it's going to default to everyone that is on your single touch payroll, is our understanding, to be eligible. So that may not be the correct answer.
Yeah. Received another question as well. I've actually been asked this a couple of times over the preceding few days, so I want to really, I'd like to address this quickly. I'm currently operating as a partnership. Can each partner, or first off, can we receive a JobKeeper payment? Sorry, a JobKeeper, I should say. And secondly, if we can we both get a JobKeeper payment? Now, fortunately, we don't live in a country like Kazakhstan, and our people that write the legislation are able to think pretty widely here. Lucky if you're a partner not receiving a wage. In a partnership, only one partner can receive the JobKeeper payment along with any eligible employees. That's a good thing. So it means if you've got a husband and wife partnership, that one can get the JobKeeper and the other one could then potentially get JobSeeker. So you'd still be looked after there. I guess the only potential issue I would see is if you have a partnership of two unrelated people, how would you decide which one would get the JobKeeper? I don't know. Probably look a bit closer on this space.
Yeah, I still think that's a bit unfair with businesses that may have both partners working in it, and also keen to see what happens with unrelated partnerships. So there's not many of them out there, but there is some unrelated partnerships. So two ladies could be in partnership running a hairdressers or something like that in a partnership. What we're reading is only one of them's eligible for the JobKeeper program, which I'm hoping they fix that, because that's blatantly unfair, because they both should be eligible for it.
And probably just continuing on with this theme, people that are self-employed, I've also been asked, look, I'm not on wages. I wasn't an employee of the company as at the 1st of March. Can I still get a JobKeeper? And the answer is, if you're a director of the company and actively engaged in the business, you will, one director per company will still be able to access the JobKeeper. So long as we can prove that you're actively engaged and that you're not receiving another JobKeeper or a job seeker subsidy, you'll be able to receive that as well.
It's an interesting, JP, on how that will play out. At this stage, I feel that we've comfortably covered all the questions that we've had in the majority. As I acknowledge, there's a couple there, like with you, Dan, that I think we need to chat offline over the coming days about that and get into more detail and get some specific HR advice. And there was a couple of others that we acknowledged that we need to get some HR advice. We are going to reach out to Abby Goff to see if we can get her available over the coming weeks to share her HR expertise from HR Sorted. I've already had the opportunity to speak to her once previously, and it was very, very insightful to get her knowledge in respect to this situation. And at the minute, she's unavailable. It's her oldest son's birthday, so she's not available to be disturbed today, and fully respect that.
Before we wind up, I've actually just received another question come in from James.
Yeah.
Can I just quickly answer that?
Yeah, spot on.
Great. Okay, I've had a question from James, and he said, our business operates as a trust, which is a fairly common business structure. Does this mean the partnership rules don't apply? i.e., can both directors of the trustee company receive JobKeeper? Now, the answer to that, as we understand it, is any eligible business, whether it's a company or a trust run by a company, can nominate only one director to receive the payment. So only one director, one person operating in a director's capacity may receive the payment, and that person can't receive the payment as an employee. So if you've got two, again, unrelated directors in a company, only one of them can receive that payment. Hope we've covered that off for you there.
So, yeah, I get that, JP. Thank you for that. I'll just finalise on what I was sharing about the HR side of things and with fair work. Yeah, we want to have an opportunity to chat to Abby when we can, who's our preferred HR consultant in this space, to get a greater understanding of what this means. So if anyone does want to do some reading over the weekend, in the Coronavirus Economic Response Package Omnibus Measures Number 2 Bill 2020, called the Omnibus Bill, this goes into proposed changes in respect to the Fair Work Act to support the practical operation of the JobKeeper scheme in Australian workplaces. As we aren't HR experts, and I haven't had the opportunity to read that bill that came out today, I'm not going to go into detail about that, but that's where Abby's expertise will come in. So we can pick her brain and find out what that means for you guys. Has there been any other questions pop up there, John Paul, before we sign off and head into Easter?
No, look, that was it. It's fair to say that Oompa Loompas have been hard at work at the chocolate factory. It's time for us to break for Easter and enjoy some Easter chocolate, Paul.
Sounds like a good idea. Before we sign off, I'd just like to thank everyone for all their questions and for taking the time on joining us on a Thursday night. Wish everyone a very safe and enjoyable Easter. Unfortunately in isolation though, but we need to be doing that to look after our families. And just also to let you know, here at Pursuit, we are working on some options on how we roll this out to help you guys get through this. So including how you assess whether you're eligible or not, some do-it-yourself options, whether we can review it for you, we can do the full lot for you, or the ongoing reporting requirements and that as well. So stay tuned next week. We're hoping on Tuesday afternoon we will be able to share a webinar in relation to this, and registrations will actually be live. So yeah, stay tuned. Safe Easter, guys, and thanks everyone for coming along. See ya.